In this video I'm going to show you the accounting transactions that happen when you process sales orders and goods out notes in Brightpearl. Now cost of sales accounting is switched on and I'll show you what that means in the video. First of all, let's have a look at this product we have here. We've got one in stock of the snowboard helmet and we're looking at the product to have a look at prices and nominal codes. So the retail price for this particular helmet is $100. To make things a little simpler, it's not going to be taxable, and the important things to look at are the sales nominal code and the purchase nominal code. So the sales nominal code is where your revenue is recorded against, and this will appear on your profit and loss report. And likewise, when the goods are shipped, your asset is reduced and your purchases, or the cost of sale, will increase. Now it's important to note that the cost of sale only goes on when you ship the goods, and I'll show you that in a second. Okay, so now let's create a sale. Let's go Sales and New Quote, search for a customer, click their name, we'll create a new sale. Let's search for this item, the helmet, and here we can see that it's one item at $100. It's also bringing in the product's nominal code, so 4020 sales of sports equipment, and save changes. So far, no accounting transactions have been made. The first thing that's going to create accounting transactions is to raise an invoice. So if I click Invoice and OK, it'll automatically invoice this sale, doesn't send it to the customer unless they've got an email address, and we've now seen that it's been marked as invoiced. Okay, so now let's have a look at our balance sheet. We've got some stock, or some inventory, $50, and we've invoiced the customer, so the customer now owes us $100 for accounts receivable. We can see that in a little bit more detail on the general ledger. So this transaction at the top is the accounts receivable, simply the invoice against the sale. And remember, we've not actually shipped any stock yet, so all of that is going to be profit. Looking at our profit and loss report, we'll see we've made $100 profit of sales and sports equipment. So that looks a little bit too rosy to be true. The next thing we need to do is actually ship the goods on the sale. So let's go back to the sale from the recent sales list, open up the sale, and what we need to do is create a goods out note, or fulfill this sale. So let's go fill order, fulfill, and ship later. So creating a goods out note simply creates a document that you can pick, pack, and ship. Again, this hasn't actually created any accounting transactions yet, but you can see that we've got goods note number 1. If I open this up, we can see we can print, pick, pack, and ship it, but it's the ship stage that removes the items from stock and creates the cost of sale accounting transaction. So let's do that now. Click Ship, and it backfills the other ones for you too. Now let's go back and have a look at our profit and loss report. Let's go Reports, Profit and Loss, and we can see, well, we still have $100 on the revenue. We've now got $50, which is the cost price of that item, against the cost of sale code. And again, for a bit more detail, let's have a look at the general ledger. This top transaction is the cost of sale journal, which is removing value from your asset and adding value to the cost of sale. So the profit we make between those two is going to be $50. Let's go back to Reports, Profit and Loss, and we can see that the gross profit here is $50. Going back to my product list, where we had one in stock, if I search the helmet, we can now see that we've got none. So it's been removed from my inventory as well. So the final thing I need to do is actually take payment from this customer. So if we go Customers, Aged Debtors, or Accounts Receivable, we can see that there's one contact in here who owes us $100. This shows on my balance sheet as Aged Debtors or Accounts Receivable. So let's take the payment now. On the right hand side of the screen, click the little green cash icon, choose a bank account. Let's say they've paid us by automatic payment, put a reference in, click Pay in Full, and then allocate payment. That now records the funds in our bank account and clears the debtors, or clears the accounts receivable, which we can see on the balance sheet as a balance on our bank account. Now I've just received $100 from the customer, but there's only a balance of $50 on here. I can click that and I can see the full detail of what's been going on the bank current account. So there was an earlier video where we had a purchase payment against a supplier, and I thoroughly recommend you watch that purchase accounting video too. And then the second sales receipt of $100, which leaves a balance of $50 on the account. You can also see that from the list of bank accounts. And we've got $50 here on the bank current account. So let's review the key concepts. First of all, you take an invoice, $100 revenue is recorded against the 4000 code. The same $100 is recorded against the accounts receivable or debtors, and if you've got tax transactions, that'll affect the debtors amount. So the second lot of accounting transactions is when you ship the goods out note, and only then do you get the cost of sale. This reduces your asset, so your balance sheet decreases, and increases the cost of sale, so what was previously 100% profit now drops because you've got cost of sale on the profit and loss. And the last thing to remember is that the $50 as the cost of sale comes from the actual cost of inventory removed. So if your inventory varies in price, then it's the first price paid. There's a first in, first out methodology. So that's a summary of accounting for sales and inventory.